I own Bitcoin, the best hard asset there is, but I'm not all in on Bitcoin. So I'm close to 60 years old. And if I was 30 or younger again, yeah, you're up against it a bit, but maybe you don't actually have to buy that house that everybody always told you to aspire to, because what happens if you buy that house and the world goes to heck in a handbasket? You don't want to be bolted down to a fixed object like a house. If you can't get out of the country because you can't sell your house or whatever, I'm not saying everyone wants to leave Canada, but that is one of the considerations when you own a hard asset. You have to understand portability, liquidity, transferability, all the things. And if I was under 30, I would actually focus on accumulating a given percent of my net worth in Bitcoin. Because Bitcoin, I believe, is the best asymmetric trade opportunity and investment opportunity I've ever seen in managing risk for over 35 years. Let's play these two outcomes. Bitcoin can either be worth zero. I don't think that's even an outcome that would happen, but let's just, to make the math easy, a binary outcome, it's either worth zero or $2 million US in today's dollars. I'm going to tell you, I'm about 50% confident in my price target. In fact, I'm higher than that, but to make the math easy, let's assume I'm 50% confident, or a 50% probability. You do what's called an expected value calculation, and you say, okay, 50% chance it goes to zero, 50% chance it goes to 2 million, sorry. 50% times 2 million equals $1 million in today's dollars. What's Bitcoin trading at?
Bitcoin has finally moved again, surpassing the 30,000 price when we're recording this video. This was expected by many who believed 2023 would be the end of the previous cycle and the start of the next bull run. Let's see if it holds above this resistance level for a few days and actually confirms to be a real breakout. Meanwhile, with inflation on the rise and currency debasement stronger than ever, you need to know the proper allocation you should have on this asset to make sure you're prepared to profit the most from what's coming, but at the same time, to protect yourself in case things go wrong for any reason. To help us understand what's happening and what are the right moves to do, in this video, we will have Greg Foss, who spent over 30 years of his career in the financial markets, making his Bitcoin price prediction and sharing what he's doing based on his experience. This video is valuable, so please pay close attention until the end. First, let's have a look at the macro and what brought us to this point.
The problem has always been the system, but the system itself has never been as levered as it is now. So what happens as you increase the leverage in the system, the frequency and severity of the downturns increase, okay? And so, but let's be clear, the fiat system has always been this way. And history will tell you that fiats always fail for this exact reason. Because they print money. In the times of the Romans, they clipped the edges of the coins and took out the gold and the silver from the coins. So fiat systems always fail. And we're just recreating that same problem in a modern age with central planning that is not just central planning of, let's say, the Roman Empire. It's the central planning of every single fiat country in the world, all operate on the same model. So we can blame the system. We shouldn't be surprised because those systems always fail. But then there's a great reset and you start fresh again. But the pain to start fresh is monumental. And people just forget that, you know, these crises have happened over time when fiat fails. And you can look in Venezuela right now, or Argentina, that's defaulted 4 times in my career. But we're not used to it in G7 countries. And here's the problem. In the 1980s, when inflation was really high, there was a Fed chairman by the name of Paul Volcker who did raise interest rates to close to 20%, 20%. But the difference was the federal debt at that time was far reduced from the current level of over 120% of gross domestic product. At that time, it was around half of that. And it's you can actually raise interest rates when your total debt to GDP is there, because the interest expense on the debt will grow, but it won't bankrupt the whole system. Now we're at a point where total debt to GDP is 120%, which is to say when you raise interest rates even to 5%, the interest expense on the existing debt is growing so quickly, you can't keep up with the expansion, the organic expansion of the debt. And that's where we are right now. We are at a point where the debt spiral is so large that no matter what you do, you can't reduce that debt burden enough. The economy can't grow fast enough to keep up with that expanding debt burden. It's mathematically impossible. So that's where we are right now. It's not good, but math doesn't lie.
Salaries are not increasing. Inflation and debt are. The lifestyle people used to be able to have with regular jobs is just a memory of the past, and the future will be way worse. The real reason why that's happening is called currency debasement, where fiat money loses value over time, and Greg gives a good example here.
Look, you can have a bolted down asset called real estate. It's just not that portable. But people have done okay in real estate. And it's not really that the value of your house has gone up. You could probably look back and say, you know what? My marginal utility of a house right now is about the same as it was in the 1960s. The difference is it takes more units of account to buy the same marginal utility, because the value of that unit of account has debased so much over the past 60 years, right?
Yeah.
So my parents and your parents, I don't know how, you look a lot younger than me. My parents bought their first house in like 1960. They paid under $20,000 for a house that would now be worth easily over $1.5 million. And that's nothing to do with the marginal utility of that house, and it's all to do to the purchasing power of the unit of account.
So how do you protect yourself against this?
I am not giving financial advice. I'll just tell you what I do. I own hard assets. Yeah. I own real estate. I own gold. I own silver. I own Bitcoin, the best hard asset there is, but I'm not all in on Bitcoin. So I'm close to 60 years old. And if I was 30 or younger again, yeah, you're up against it a bit, but maybe you don't actually have to buy that house that everybody always told you to aspire to, because what happens if you buy that house and the world goes to heck in a handbasket? You don't want to be bolted down to a fixed object like a house. If you can't get out of the country because you can't sell your house or whatever, I'm not saying everyone wants to leave Canada, but that is one of the considerations when you own a hard asset. You have to understand portability, liquidity, transferability, all the things. And if I was under 30, I would actually focus on accumulating a given percent of my net worth in Bitcoin, because Bitcoin, I believe, is the best asymmetric trade opportunity and investment opportunity I've ever seen in managing risk for over 35 years. I was primarily a credit trader, and so junk bonds and distressed debt, but it's no different than evaluating risk return and getting an anticipated return on your investment, okay? Every investment is the same. You evaluate the risk. You say, for this level of risk, I need to anticipate a return of X. And if the risk is twice as high, the return should be 2X, okay? That's a rule of thumb, that you have to increase your return as the risk increases. And the funny thing is that Bitcoin appears to be risky, but the appearance of risk versus true risk are two totally different things, okay? So I actually believe Bitcoin to be incredibly unrisky. In fact, I believe Bitcoin is insurance. And since it's insurance against the fiat Ponzi, I advocate everybody needs to own some Bitcoin or else they're actually taking higher risk by owning zero.
This takes us to Bitcoin. Greg will now make his Bitcoin price prediction and explain what, in his opinion, is the proper portfolio allocation everyone should have, so listen carefully.
0% of your portfolio in Bitcoin, or else your portfolio is actually higher risk than if you had a proper portfolio allocation. Now, the proper portfolio allocation is going to depend on the age, the family obligations of the individual, the lifestyle choices. Like, if you absolutely have to live in a house, then I'm not going to tell you not to live in a house, meaning, or own your own house. If you have to, just because that's your personality, that's fine. Just understand some of the risks that come along with owning a hard asset that's a house. So all of this is to say, everything changes with your age, your income, your family responsibilities, your personal risk tolerance, and your lifestyle desires. But don't own zero. Look, if you own zero Bitcoin at any age, you are doing it wrong. Okay? You're exposing yourself to more risk than if you actually had X% of your portfolio in Bitcoin. And generally, for the non-believers, go and get 5% of your portfolio in Bitcoin. I know it sounds like a lot, but it's not. You still have 95% of your portfolio in other stuff. And this 5% could literally go up 100-fold from here, which means that 5% turns into 500%, everything else being equal. That's beautiful. That's asymmetry. Asymmetric returns define careers, or return opportunities define careers. So I have a price target on Bitcoin of over $2 million US per Bitcoin in today's dollars. I got to be real clear about that. In today's dollars, which again, given it's trading at 25,000, is plus or minus 100 times higher. Damn, that's a pretty decent friggin' return opportunity. The fiat will debase. Right now it's acting as a risk-on asset, but I believe over time it will act as insurance, and as insurance, it actually becomes a risk-off asset. But this is part of the learning process in markets. All of which is to say, yes. Let's play these two outcomes. Bitcoin can either be worth zero. I don't think that's even an outcome that would happen, but let's just, to make the math easy, a binary outcome, it's either worth zero or $2 million US in today's dollars. I'm going to tell you, I'm about 50% confident in my price target. In fact, I'm higher than that. But to make the math easy, let's assume I'm 50% confident, or a 50% probability. You do what's called an expected value calculation, and you say, okay, 50% chance it goes to zero, 50% chance it goes to $2 million, 50% times 2 million equals $1 million in today's dollars. What's Bitcoin trading at?
25,000.
25,000. And my expected value outcome is $1 million. What are you supposed to do? Hello,
take the
McFly. McFly, if you've done your math and you believe in your math, yes, you take the bet. It's like going to a horse track where you've watched a horse train, and just like this year's Kentucky Derby, they laid 100-to-1 odds against that horse winning. And you're like, damn, these odds are wrong. I've watched this horse train. Now, I'm not 100% certain he's going to win, but I'm way more certain than 1 in 100. So what do? You go and you take that bet. And the guys that took that bet made out like bandits because they did smart risk management.
But how can you explain that to someone who doesn't see Bitcoin as real money because it's not a physical object?
Ask them if they understand the internet, and they'll probably say no. And then ask them if they use the internet, and they'll probably say yes. And then you say it's the same thing, okay? You don't need to understand how Bitcoin works in order to appreciate how valuable it is. Is the internet valuable? Yes. What's it backed by? The network. Is Bitcoin valuable? Yes. What's it backed by? The network. Okay? It's exactly the same thing. And if they're too stupid, I'm just sick of talking to stupid people, because some of them you'll never get it through their thick head. And I hate to be that crass, but my friend Jason Lowry, who wrote probably the best thesis I've ever seen in my life, called Soft War, and it's in defense of Bitcoin, and it's being presented to the Department of Defense in the United States. 400 pages of brilliance, okay? You don't have to agree with it though, but you got to read it, because if you don't read it, you're not doing your homework, and I can't help you.
To close this fantastic interview with Greg, this is his portfolio allocation.
I like hard assets, so I own gold, I own silver, I own oil, I own real estate. My biggest exposure is real estate. It's a lifestyle thing. I have 3 kids. We have a house. Shame on me, but yeah, we have a house. Like, that's just the way it works. We have an investment property in the United States where we rent an investment property, but we spend some time there. That's a good investment. Neither of them are portable. If I have to move to El Salvador, these are going to go for sale at fire sale prices, because you got to get out. You know what I mean? Yeah. So this is why you have to balance portability, transferability, scarcity, all the things that make Bitcoin beautiful. And you don't have to have all your assets in Bitcoin. I think we've laid out that scenario pretty well. So don't own zero. I mean, again, for anyone who listens, okay, please do some work. And you're not going to get this right away. It's going to take you some time. But understand how flawed the fiat system is, and then understand how beautiful Bitcoin is as a solution. Now, Bitcoin is the only digital asset that solves it. Ethereum is a proof of stake, centralized fiat asset, okay? Ethereum is exactly like fiat, but Bitcoin is not controlled by anyone. There's a fixed supply. Ultimately, it is the solution. It's the only digital asset that solves the fiat Ponzi. So be careful what you invest in, and understand that Bitcoin is not crypto. Bitcoin is a standalone asset class within the crypto asset.
Do you agree with Greg and think Bitcoin can reach the $2 million price target? Let us know in the comments below, and if you want to see more curated content like this, please leave a like and subscribe. Thanks.